I'm German, so I would stay with a good party in Germany. I would say do the repositioning plus to give you a blend of a good economy, of a good outlook, and some extra margin. At the same time, I would give credit to those countries who have managed to, say, address some of the issues, and eventually go to Spain on a very core product.
I would invest in affordable housing, resi projects in Germany, as I mentioned earlier. I think there's potential there because of the demographic changes. Then I would invest outside of real estate also. I mean, it's a totally open question, right?
For you, Sascha, it is, yes.
Okay. I think the fintech area, digitalization, etc. If you invest right and you have a portfolio approach, I think you can make substantial amount of money with higher yields. And then otherwise, I would just keep the powder dry. There will be good opportunities coming up also in the real estate market in some years. The problem is people never keep the powder dry. Yeah, if in 2000, 2007, 2008, as an investor, you would have had free balance sheet. You could have made a lot of money. It's my personal opinion, because as a banker, you always have to make money in all parts of the cycle.
Okay, good. Anthony, should I keep my powder dry or?
Well, I'm prohibited from giving investment advice under my membership of the Financial Conduct Authority in the UK. However, on a personal note, what I would suggest is I need 2 billion euros. So can I suggest to the other 3 members on the panel that they all allocate their money of 500 million apiece into my fund, and then with 2 billion, which is a sensible size fund, of course, Richard.
Yes.
I would consider a pan-European, that's including UK, debt fund in a wider context to cover investment and development. I think it needs to be very broad-based in what it does, and it needs to be open-ended, because that enables a fund to be able to deal with the movements of the cycles in terms of returns and the natural flow of repayments, which is something we haven't touched on this morning. And that is debt funds face repayments, which property funds do not face. When you're a debt fund, you lend your money and you pray it doesn't come back too soon, because you've got to recycle that. So in a closed-end fund, that's a real issue. In an open-end fund, and this is something the market needs to consider, open-end funds with sensible liquidity control provisions is something that the market should start to take on board. So with a 2 billion fund, I think we can make some sensible inroads.
Okay, good. Daniel, are you going to give the
So now that's the thing. Do I take the easy answer? I'll give you my money. But I'll go back to last year, because I think last year I put my 500 million into Moscow,
Yep.
and it hasn't performing too well so far. So I'll just buy another 500 million more in Moscow, because I'll get more product, because I think eventually we're going to be very good friends with Vladimir and his country again, and this market will rebound.